November 14th marked the Fed pause due to the positive October inflation report. Just to clarify, that's my opinion and not a consensus. The message from Jerome Powell was that they continue to be data-driven and won't hesitate to raise interest rates further if needed. But I believe what was really at the top of his mind was pause. Of course, he can't say that because assets would rally, and we can't have that. Since then, I've been buying silver aggressively, and this box here is the first of those orders. So we're going to have an old-fashioned unboxing. But doing this in a new style where the box is prepped first so you don't have to sit through all that cutting. We're also going to look at the latest update in the gold and silver purchase index charts to see what's new in the market. Let's get into it. Every video I make includes this in the description. My approach to investing involves buying silver and other assets on a regular dollar cost average schedule. As prices and interest rates fluctuate, I may also increase my purchases accordingly. And increase I am. In May, when silver was trading at $26 an ounce, I accurately predicted that the price would likely drop to $21, which it did 5 months later in October. For 4 days, the price bounced off of $21, then started heading up to where we are now, at over $24. That's not boasting. I just want to emphasize the importance of logic and market analysis in determining realistic price targets by bringing attention to my track record. Because you all know that social media is full of these conspiracy guys with their $600 silver price predictions. These videos are often created for the sole purpose of generating click revenue, rather than actual profits from investing. They're not based on any sort of fundamentals, relying instead on hype, FOMO, and distorting the facts. So now, I'm calling November 14th as the Fed pause. The end of interest rate hikes, which will lead us into easing rates next year, in 2024, which means higher gold and silver prices. That's why I'm buying aggressively now. By the time it's obvious the Fed is easing, it'll be too late. By then, silver will have already moved higher, with the majority of the move up happening too quickly to catch. Like they say in the investing world, you want to be where the hockey puck is going, not where it's been. The Fed is moving to lower interest rates in 2024. These 1 ounce Asahi logo rounds have become my favorite lately because they're cheap, recognizable, and high quality. Asahi is a Japanese conglomerate that bought out Johnson Matthey's refinery business here in North America a few years ago, so it's very possible these rounds are US minted. They just have the Asahi logo on one side, together with a repeating pattern on the other. The reeded edges are nice and smooth, not with the sharp edges you sometimes get on others. Just a good quality round. Recently, we compared buyback prices on various silver products, from rounds to coins to bars, and found that the smallest spread between sell and buy prices are these rounds when you can get them cheap. That spread is important because it shows how much the silver price would have to go up just to break even when you go to sell. You want the spread to be as low as possible. Markets can change, premiums can change, but the data we have today shows Asahi rounds to be among the best for stacking. And then there's the possibility of a currency collapse. It could happen. It's not likely though. And we're definitely not going gloom and doom here. But a lot of stackers, or maybe we should call them preppers, like this 1 ounce size because they do believe things are going to go south. And when it does, they're going to survive by using silver for barter. There's some historical precedent to support that. After the Roman Empire fell, barter was used in trade. Barter, the exchange of goods or services without the use of money, remained common in many parts of Europe. However, the use of coins also persisted. Roman coins continued to be used in exchange because they held 4 qualities. 1. They are recognizable. 2. They were standardized in weight, size, and metal content, making them easy to evaluate and compare. 3. They were made from durable metals such as gold, silver, and bronze. And 4. There was a scarcity of alternative currencies. This discussion establishes that both rounds and sovereign mint coins could be utilized for trade. Now, whether anything like that actually happens or not is irrelevant because what it does mean for us stackers right now is that these rounds are very liquid because people want them. There's always going to be demand. This order is from Bullion Exchanges, by the way, one of the 3 online dealers I use for most of my stacking. The others are Bold and SD, and I buy from others too, such as Pinehurst, Hero, JM, and AppMex, but these are the main 3. All right, let's get on to the market update. If November 14th marked the Fed pause moment, there wasn't much of a reaction in the silver and gold markets. Sure, there was a small pop in silver's price, but in sales volume, barely a reaction compared to extreme reactions to other prior events, which kind of makes me sound like a lone voice in calling the Fed pause here. Nevertheless, I'm confident in the call, which has support from the CME Group's Fed Watch tool. We're currently at 550 basis points, with almost no chance of a rate hike in December. They put the prospects of a June 2024 drop in rates at 43.6%, and by the end of the year, they have us down to 4.25 to 4.75% interest rates. These guys have been pretty accurate only a few months out. Easing rates around June, July sounds reasonable. Their long tail projections are almost certainly wrong. I'd say lower, closer to 4%, on the assumption that the Fed overshot rates on the upside and will hold them high for too long. So their only course of action will be to overcorrect by rapidly dropping rates to juice the economy, at which time this roller coaster ride starts all over again. We saw a slight pullback ahead of the Black Friday shopping week here in the US. It used to be just one day, the Friday immediately following the Thanksgiving holiday, but it's expanded to encompass the entire week before and after Thanksgiving. I picked up some nice deals on silver, and it looks like a bunch of other people partook also. What's really interesting in this chart is the volume is back up to nearly where it was in August, at the 40% mark on the index. If you recall, back then, premiums were high and inventory was still a little tight. The bonkers that followed with a crash in both spot and premiums led to these crazy wild swings in volume. Things are a lot more settled now. I just wonder if we're headed for a creep up in premiums. Don't know, but as for right now, silver is cheap. And that wraps up today's video. If you found it informative, be sure to smash that like button to help others discover it as well. To stay updated with our latest content, don't forget to subscribe to the channel and enable notifications by tapping the bell icon. For those already safeguarding against uncertainties by investing in precious metals like silver and gold, ensure you're making your purchases at the best prices. Visit citystacker.com where you'll find the best deals on precious metals bullion from top online dealers. The link can be found in the description for your convenience. As always, thanks for watching, and we'll see you next time.